Investors and traders, welcome to the channel Market Chart Pattern. Today is 17th of May. It's Friday 2024. I hope everyone is having a great day. In this video, we will be taking a look at the key US markets, and we'll also take a look at some of the European stock indices as well. As always, this video is for educational purposes only and is not a financial advice. So we'll start by taking a look at the dollar index, and I believe it is one of the most important charts that we are going to take a look at. So as you know, what we have been discussing for a number of days and weeks now, that we are expecting the dollar to actually weaken against a basket of currencies. And the reason is that based on the technical picture, we believe 107 to be a very important high. And we have seen a double top formation around 107 before. And in this recent run up, which started from pretty much the beginning of 2024, in fact towards the end of 2023, and December happens to be a month in which in general a lot of moves, defining moves take place in the month of December, and usually it's around towards the end of the year is that when we see some significant moves come in certain currencies, Japanese yen, for example. Anyway, I just digress. So we were actually looking for the market to get up to possibly a retest of 107 because of this one-to-one price projection ABCD. But then this gap open was filled right at the 1.618 expansion, Fibonacci expansion, and we have seen a sharp move lower. And what we saw in terms of price action today is that the market or the dollar was stronger in the mornings, especially in the European morning. And then when the New York trading started, we began to see sell pressure come for the dollar, and the euro and other currencies began to rise against the US dollar. And one of the reasons that why it was anticipated or expected some strength to come here at these levels around 104 is because of this our old concept of market symmetry. Because if you look at this previous decline, it is about the same. Now what is really important is also that if this market begins to actually break this market symmetry, so go below 103.90 level on closing basis, and we have the smaller ABCD here as well coming around 103.60, that would be a further indication for lower prices for the dollar. Now we'll take a look at the Euro USD, and here the pattern is a little bit more clear in my opinion. So this is the daily chart of Euro USD. There is a nice clean break of this trend line. There is always a possibility that in fact this trend line could be retested, and if the price actually rejects lower price and moves high, then that's going to be another ABCD move higher. And today what we saw is as we were looking at the dollar index, the market actually moved lower, but the important thing to note is the market did not close below the low of the 16th of May candles, that is yesterday's candle. So that's an important development. Actually the momentum remains strong because the price is above the 8-day moving average, which is above the 20-day moving average, which is something a lot of shorter term traders take a close look at. And here, same as what we were looking at in a dollar index, I'm just gonna make it a little bit thicker, this line. Here we go. And this is the same concept of the market symmetry. So this is the previous rally, which was about this much, and then this rally is about this much as well. And we might have some Fibonacci, more like a 78.6% coming from this low to this high as well. But anyway, the bigger pattern that we had been watching for is on the basis of the number of support confidence levels that come around here and the break of the trend line. So here's some consolidation taking place after a pretty big move in this market. As big this move has been, a really big move has been in the precious metals, and here gold had a really nice move higher. And when we did the last video, we were discussing that this ABCD, which pattern is something which we discussed on the video we had done over the weekend. So this pattern is negated because the price actually closed above the C point. So I'm going to remove this, and I like to do things live with you guys, so that's why it was there. And just remove this, and also remove these notations as well. So these are now gone, and it has moved right into this box, which is essentially you can look at this box as essentially a gap between this candle's high and the wick, and it has moved back into this gap just the way this candle had moved into the gap of this candle's high and this wick high. Now the chances are actually we are going to see a continuation of the move higher, which we'll discuss further, the further targets in our weekly video. But the important thing to note is that the market had a pretty big move, and the momentum has also really improved as well. So again, a weaker dollar and gold stronger. So this is tying back with the macro that we had been discussing, okay, which we'll cover more in our weekend video. Now, an equally impressive, but not equally, actually even more impressive move actually had been in the silver market. And look at this. This is fantastic. In 2011, the silver market hit $50 per ounce level. We are around 31, or maybe it's gonna go to 50 and beyond as well. And there was another time in the history when the silver had actually hit $50, and I believe it was in the 1980s. But I think in the weekend video we'll do a review of really longer term charts as well, data permitting. Now the interesting thing is that it has gone and actually done this 1.618 expansion of this swing, this swing high to low. This pattern that we were watching, it's no longer there, so I'm gonna remove this pattern, and also remove these notations, and here just making the chart more clear, and also remove this one, just cleaning up the chart a little bit. All these annotations need to go. So where this market actually closed, we have this ABCD pattern and 1.6% expansion. Maybe next few trading days the market just consolidates around this level. It's a pretty big move, so really interesting here. Now let's take a look at the yields. We'll start by taking a look at the 2-year treasury note and see how it did. So the yields are actually it's the second day that the yields have actually been going up, so that's an interesting development. This longer term pattern actually that we were watching could in fact see the yields go as low as 3.9% if we are actually in this leg lower. So we'll have to wait and see. If we just look at the treasury bond futures, and here what we're looking at is 2 days of yeah, it appears the market is consolidating a little bit. Really important it gets above 118.20 and above this trend line here, because that will break the bearish symmetry. Till that happens, yeah, we could see days where the market just goes sideways and there's a big up, and then there's a few days it just retraces. So not a fantastic looking price action in this market, but looks, the chances are we're actually moving in the CD leg higher, which means yields lower. And then we will take a look at the TLT, and the TLT unable to close above 92.40. Really want to see this market breaking above 92.40, and then just like 30-year bond futures, it could be moving higher. In other words, yields for these 20 plus year duration treasury bonds moving lower. Okay, now with this we'll actually start by taking a look at the European markets, meaning the equity markets. And here is the chart for FTSE 100. This is daily chart, we see another consecutive day of consolidation around this level. It has had a fantastic move to the upside, and it's just hovering around this 8-period moving average. Chances are it could still get to 8565 a little bit higher, unless it begins to close below 20-period moving average, which is quite far away at the moment. German DAX, this stock is very similar to, this index is very similar to the kind of index we have in Dow Jones. It's a index of 40 stocks, but Dow Jones is price weighted. I don't think this one is price weighted, it's more like market cap weighted. Here we can see after hitting this 1.272 expansion, 2 days of consolidation, just closed right at the 8-period moving average. But the important thing to note is this, that it did not actually close or move below the low of 14th of May. So that's important to note. Now we'll take a look at the S&P 500. So this is the daily chart of cash SPX, and I've cleaned up a little bit this chart. Looks like it's gonna go for the 5350, which is the 1.272 expansion. Momentum perspective, the price is above 8-period moving average, is above the 20-period moving average, so it looks strong. But it has these 2 days of consolidation and but a pretty big move up higher as well. And if we were to take a look at the SPY, here we go. The SPY is let's take a look at 1.272 expansion. There we go. Yep, this one is also close to 1.272. Yeah, taking a look at the futures. So the futures, there's a big difference. The cash markets are higher. And I don't know the reason, but I'm trying to find out the reason. I found one video of Peter Elides, who put a video on his YouTube channel, and where he's trying to explain that. I need to watch that video again, and maybe in our weekend review we try to understand what his findings are. But on the futures chart, you can see the 1.272 is a little bit further away, and what it is doing is it's just right at the all-time highs. It's just hovering around that. And now let's take a look at the NASDAQ 100. This is the cash index, and this one is stronger. It has taken out these highs. And if we were to take a look at the QQQ, which is the ETF, this one again 2 days of consolidation above these highs. And if we were to take a look at the futures, you can see a slightly different picture here. The stocks have gone up, meaning the cash index and the QQQ a little bit higher, but this one is just challenging these highs from 21st of March. It's just pretty much just consolidating around that. And then let's take a look at the E-mini Dow Jones futures. This is much stronger now. It has yet to challenge these all-time highs and maybe possibly to 1.272. And if we now take a look at the Russell 2000, because this is really important to take a look at that. Today was a narrow range day today. It's just around the 78.6% retracement, just hovering around that level. And the cash IWM, so this is the Russell 2000 ETF for the Russell 2000, and it's just slightly above the 78.6% retracement. So what we are seeing is in some indices, they're making a little bit of a higher high in their cash terms, but the futures are really challenging the all-time highs. So this is the kind of picture we also discussed, that some indices might actually go a little bit higher, some ETFs higher, some around the old highs. So we'll discuss more of that in our weekend review video. And let's also take a look at the NYA, which is the New York Stock Exchange composite index, and look, it's just also gone above, making a new all-time highs for this index as well. So pretty interesting situation developing here, and we have now completed the third week of May, so we are actually in the second half of May now, and this is what we were looking at. Excuse me, I'm wrong, sorry. So we have got 2 more weeks of May to go, but we are actually, in the second half of May. And from our timing model that we like to take a look at, this is something that we were discussing. The markets are stronger coming into the second half, then maybe that low that we were expecting might have come in earlier. That's also expected, but we'll just still keep on watching that time window between 24th of May and 29th of May, with 2 to 3 trading days either side. So thank you very much for watching the video. If you like our analysis, how we look at the markets, please do subscribe to the channel, and if you found this video of educational value, please give it a thumbs up. Speak to you guys soon. Good luck, good trading, and bye for now.